Hey, what's going on, you guys? Josh back with another video here for you. And today I want to quickly talk about the strategy of shorting lower highs on a big chart. Now, this is one of my favorite strategies to trade because it has everything there for you, right? You have a defined risk, you have great risk to reward ratios, and it's very easy to identify. So, with that being said, we're going to go ahead and talk about it today. But before we get started, like always, I just want to say that I'm not a guru. I trade full time, but I don't have any secret sauce or magic pill that's going to get you rich. All these videos are a product of my experiences in the market, so it's okay to disagree with me. Take this information, do your research, and if you like it, then make it your own. So with this strategy, who is it geared towards, right? People who don't like trading the market open, but they want to take advantage of those big movers that happen every single day. The individuals who tend to look at stocks with a strong short bias, and people who prefer to focus on big picture setups, they might be able to benefit from this strategy. And what are we looking for, right? We're looking for a stock that's had a large move to the upside without any major pullbacks, right? So a stock that's up, 30, 40, 50, 60% intraday, but hasn't really pulled back yet. We're looking for a stock that has range and volume that's considerably higher than prior range and volume. And that's basically telling us that this stock is in play, right? It's basically telling us that this stock has an audience. And then we're also looking for indicators that show us the backside of the move is coming potentially, right? So with that being said, what do we need to watch out for? That's the next big thing. We need to watch out for the false assumption that stocks are going to fade for the rest of the day. A lot of times these stocks, it'll go up. Let's say it pops up $3 a share intraday, then it pulls back $1. Well, a lot of times it'll catch a base and it'll rip to new highs, and you need to be careful and understand that you need to go ahead and lock in profits and don't try to hold these stocks all day. Understand that you don't want to jump the gun. Let the chart set up. Don't get in unless you see those indicators. If you don't see indicators, you don't have a trade. So keep that in mind. Don't get in early. Let the chart set up, let the price action tell you what to do, and wait for those indicators to present themselves before you take an entry. And then make sure you're getting a quality entry, right? So you can manage your risk, make sure you're taking appropriate size, and the better the entry, the more patient you can be on your position. With that being said, we're going to go ahead and jump into the chart here. Right now, we're looking at XON. As you can see here, the stock's having a big move. We have a lot of volume here and a lot of price action on this day from $16 up to $20. You see on the daily chart, we have a lot of resistance at $20, pretty major resistance there. So we're definitely going to keep that in mind when we're doing our technical analysis. Another thing we want to look at when we're performing technical analysis is the characteristics of the stock. So if you look here, every single time this stock has any kind of volume and any kind of price action and range on the day, it tends to hold that move. So if the stock is down on the day, it tends to close near those lows. If the stock is up on the day, it tends to close near those highs. So let's keep that in mind whenever we're looking at it. With that being said, looking at the intraday chart here, we see that the stock had a nice move, ran up pretty well, and we ran up about $3.50 a share in about an hour. So pretty big move here, and you can see the trend. Prior resistance becomes new support. Prior resistance becomes new support. We also have some resistance here at $18.50. And once we broke that, we perked up to $19 and we accumulated some shares here. Started to kind of create some support over and under that $19 area. And then we made an attempt to perk up to $19.50, but all of a sudden we had a big situation present itself to us, right? We had this move here. Now this move here, this is something that we look for whenever we're looking for, late day faders, right? So when a stock that's had a big move to the upside, and then now we're looking for those indicators, and this is the first indicator we look for, right? We're looking for this big move to the downside, right? So the stocks came up here in an hour, $3.50, right? So pretty big move. We're up $3.50 on the day in 1 hour, but all of a sudden, in about 3 minutes, we pull back a third of that move. We give back $1 of profit in about 3 minutes. So in a fraction of the time it took us to go up $3.50, all of a sudden we've given back $1 within 3 minutes. So that's something that we're looking for. And all these people that are accumulating shares here, people that are buying at $18 because it's holding a trend, and people that are buying at $19 because it's holding $19 as kind of that support area. Once this thing drops $1 a share, everybody has the same reaction, right? And now that's going to start to cause some emotional trading as a result. So we're anticipating, or we're looking for an emotional reaction to that move, and we're looking for this trend to change as a result. Now, as this stock drops $1 a share, there's your first indicator, right? A large, sharp sell-off following a big move. And once you see that indicator, you can go ahead and take an entry on that next bounce. So when this stock bounces and puts in a lower high at $19, it's okay to take an entry there. That's not a bad entry. You have a set risk. Maybe your risk is break even. Maybe your risk is to the high a day at $19.50. but you have a set risk and it's a good entry because you got that lower high, which is also an indicator, and you also have that large, sharp sell-off following a big move. But in that case, you would have gotten stopped out, right? If your risk was break even at $19, once you broke that $19 area, once you broke that prior lower high that we put in at $19, you would have gotten stopped out for break even or for a small loss, but that's okay. And all that tells us is that the stock wasn't ready yet. So it's not a bad trade. It wasn't a bad entry. You followed your rules. The stock didn't, or the trade didn't work out. So you manage your risk, you cut your loss, you take a little small 10, 15-cent loss, and you reassess the stock, right? It's okay to get back in, but if the stock's not ready yet, go ahead and take it off, and you can get back in a couple minutes whenever the stock sets up. The second indicator comes here with a double top. Once we see this double top, now we have two indicators that tell us that this stock could potentially pull back and start to give back some of those gains. So once you see that second indicator, now you have even more conviction to take a position on this. And you can get in at $19 here for the second time. The reason we're getting in at $19 is because it's a whole dollar number, and also because it was the prior top on that lower high that we put in before we got stopped out. Now, if you missed this entry here, which a lot of people might, you have a third entry here once we perk up to $19 again. And if you look, it's also a lower high from the prior high, which was around that 1950 area. So we double topped, we pulled back, we perked up to $19 again, put in a lower high. And now you can get in with the 50-cent risk to the high a day, because now you have a lot of conviction. So you can get in, take some pretty moderate, small size, risk to the high a day, 50 cents. And in that case, the stock ends up fading $1 a share from your entry point. And you have a perfect 2-to-1 risk to reward here, and you have a great trade. It's a really, really great trade. So made some good profit. Risk was the high a day, great risk. You had a great entry. You were able to manage your risk well, and you were able to take $1 of downside as a reward. Now keep in mind that with this strategy, like I said earlier, you don't want to be holding this stock all day, right? Once the stock puts the move in that you were looking for, take it off, take your gains, right? Unless you're playing large size. If you're playing large size, let's say you have 3,000 shares of this or something, go ahead and lock in half, right? Lock in half, take your profits, and then you can hold the other half as long as the trend holds. But if the trend breaks, obviously take it off. But in this case, that dollar move to the downside was as good as it got, right? It pulled back to $18. It dropped to about $17.75, and then it caught a base. And as you see here, we started to perk back up, and before you knew it, we made new highs on the day. So make sure you're locking in those gains, because if not, you're probably going to end up getting stopped out. And the one thing that I hate more than anything is turning a winner into a loser, right? You go from being up $1 a share to all of a sudden being down 50 cents a share and getting stopped out into panic. So lock in profits, take your gains, and you can always find another trade and make money. So with that being said, thanks for watching, guys. Hope this video helped you. If you have any questions, leave them in the comments below. If you want to see a part 2, I can definitely do that, and we can talk about a couple of the charts, show you some more examples of the strategy. But for time's sake, I wanted to keep it kind of short and sweet to the point. But thanks for watching. I appreciate you taking the time to check this out, and I will see you guys in the next video. Have a good one.